Hi, this is Mike Swanson of Wall Street Window. I'm speaking with a very special guest today. I'm speaking with David Skarica, runs the website addictedtoprofits.net. How you doing today, Dave?
Good, Mike. How you doing?
Oh, just great. Now, we're doing this on Tuesday, January the 30th, around 2:30, and all the markets are down. In fact, the Dow, at least a few hours ago, was down over 300. Who knows what it's going to close at, but the thing is, this is one of the first times I can remember the Dow dropping in, this much in like a year. So what's going on?
Well, look, one thing you have to understand is you and I began talking bearishly a couple years ago, and there's this old adage in the markets that being early is the same as being wrong. But there was a couple famous people before the 1929 crash who warned about the crash, and they ended up being right? Even though they were, say, doing it from 27 or 28.
That said, though, we weren't bearish last year, or
no,
we got bearish in 2015.
Yeah, I should expand on that.
Yeah.
Well, last year I just had that feeling that it wasn't really going to tank last year, so we just I was using more of my shorts last year as a hedge and wasn't as bearish as I had been the previous a couple of years. It just didn't feel like it was right. But when you look at the way the markets have gone up parabolically, with this huge move with no corrections, and this is something that usually happens near the end of a major cycle. And of course, the Bitcoin and cryptocurrencies went completely parabolic at the end of last year. And it's just feeling more and more like we're in the latter stages of this bull market. Now, look, that doesn't have to mean it's going to crash overnight. The whole thing with topping and bear markets is it tends to be a process. And if you look at, for example, in 29, the market actually moved parabolically into January, just like this, then actually had a 5-month consolidation into May and then broke out into September and then crashed in the fall. So who knows, maybe something like that would happen. But I just think we're getting closer, and we're starting to see the things that usually happen in a topping process. We're starting to see the internals decline. Like, for example, even though the market today is only about 2% off its all-time high, we have more new lows in the NYSE than we have new highs. And they were about equal yesterday. Yesterday was the first drop we've had in a long period of time. So just a one-day drop, and all of a sudden we get the same number of new lows as new highs. So I just think that right now we're getting closer, and we've seen things like Investors Intelligence and all of these polls and all these things showing extreme levels of bullishness that actually almost we've never seen before. So again, you look at the sentiment combined with the internals, the valuations, stock market cap to GDP, so the size of the market compared to the economy, is now back at the 2000 levels. So we've had this extreme valuation going on, bullish sentiment. These, again, are all things that tend to happen near the end. And then, you and I lived through the .com bubble, and to me, a lot of what went on in the blockchain stocks or cryptocurrencies themselves kind of reminds me of the .coms in 99, 2000, and that was, again, the end of kind of the equity market bubble in 99 or 2000, and you had this extreme volatility and extreme overvaluation in this, in this extreme volatile sector.
Well, I think you're absolutely right about the cryptocurrencies and the Bitcoin blockchain stocks. We were watching them last year, and I think the simplest example is that Riot blockchain that went totally crazy, and I talked about it on the website. But I told people that this company doesn't make any money, and it's probably really worthless, but it's going to probably go up anyway, and it did. And it went up, so it got so crazy, though, that there was one day in December in which that stock was the 7th most actively traded stock in the United States. And it's just crazy. But what's interesting about it to me also about the Bitcoin stuff or cryptocurrencies is people involved in it really think that this is going to change the world and it's some form of liberation, you know, against central banks and all this kind of stuff, and going to create freedom. And they think, you know, you sent me a video of Jeff Berwick speaking the other week in Miami at this Bitcoin conference of 4,000 people there, and he said you're not doing this to the audience, you're not doing this to make money, you're doing this to change the world. And I want to read in that kind of talk, you mentioned that in 1999, that talk was out there too about the internet stocks. It wasn't just the stocks are going up, but this was going to change your life. I just want to read to you something kind of interesting, a quote, and this is what it says. I mean, you think about what people are saying now about Bitcoin. This says the small investor has never been in such good shape because of the power of all this. And he said, this is the direct quote, the small investor has never been in good shape. It's never been this easy to have control over your own monetary destiny. Sure, guys have been talking about financial democracy for almost a decade now, but this time it's here for real. And what's funny is that's not someone talking about cryptocurrency trading or Bitcoin. That's Jim Cramer back in 1999. So it's a direct parallel, I think, to the crypto stocks and the mania in that, and the trading mania in that, where, you know, something like 300,000 people opened up accounts to play Bitcoin right after Thanksgiving, with the mania of trading that came in internet stocks in the late 90s.
Yeah, well, I think that's, well, and what's interesting is I think one thing you get when you have these new technologies involved in a bubble is, and usually that's part of the reason for the bubble because people believe in the new technologies, is they do think it's going to be liberating. Like in the 1870s, it would have been railroads. Well, railroads were the first way you could really link up cities and countries. And, you know, before that, travel would have been very domestic or taken forever, right? And then, you know, in the 20s, you had radio and these automobiles. And then in the course of the 90s, you had internet. So everyone thinks that they're going to be liberated by these new technologies. And to a certain extent, you are. Like, you know, I live in the Bahamas, and without the internet, I couldn't live down here because I can do my business purely online. So, you know, it is to a certain extent, but I think to think that like you're going to get away from central banks or politicians having power over you or this or that, that's kind of naive, and that's kind of the insane part of, you know, what goes on in these bubbles, et cetera, et cetera. And look, I do have to admit, in the cryptocurrency side, I find some of the participants to be, I find it, I don't know the exact word, you know, it's a little creepy almost. It's cult-like, like if you, the speech you were talking about Berwick made, and I actually have no problems with Berwick because he's one of the few, by the way, in that community who's actually told people to sell and take profits and, you know, and warn that this could be turning into a bubble. But you listen to the participants and the way they react to what he's saying, it is very cultish, or they think this thing is going to change the entire world. And part of the thing what's so interesting, I think, with the crypto community is when you look at even the .com bubble, the idea was, oh, these companies now are trading at these valuations because in 5 or 10 years, they're going to be doing all this business and making all this money. So at least it was still based on the premise, even if at the time the companies were not profitable or not making any money, that they would in 5 or 10 years, right? But the crypto thing is basically, it's purely just numbers when people talk. They don't really talk about business models. They don't talk about how this is going to be profitable. They'll just talk about the prices of these coins or the market caps that these coins have, with really no underlying fundamental backing for that. Like, for example, it's just, you're talking about blockchain. It's estimated that there's going to be about $300 million in 2017, or was in 2017, done in blockchain, spent or made. And that's going to go to $3 billion by about 2020. Whoa, $3 billion, when you think about that, the whole crypto market has over $500 billion in market cap, and that doesn't even include, these blockchain stocks themselves. So, which probably they're all pretty small, but it probably adds another 10 or 20 billion or something. But that's what I'm trying to say, that you're talking about something that's going to do $3 billion worth of business in 2020, and you've got hundreds and hundreds of billions dollars worth of market cap. So it just makes no sense to a certain degree. And then again, when I hear people talk about these coins, they're always just talking price action. No one talks fundamentals. And I don't mean fundamentals all about the technology they have. I mean fundamentals about actually cash flows, actually making money, which is what something should trade upon, not just trade at some arbitrary number.
Well, I think to go back to what you started the conversation with, the stock market, potentially falling at some point, is that I think in 1999 those internet stocks started to blow up in the spring of 2000, and some of them just topped out and completely collapsed. And the stock market itself, though, just had kind of a hiccup in April 2000. And it wasn't until after Labor Day that the S&P 500 and the Dow started to fall. And the Dow didn't really even decline till after September 11th in a meaningful way. So the point is that the internet stocks popped, but a lot of people didn't feel, it didn't really impact the rest of the financial markets until months later. So even if Bitcoin is falling or has popped, maybe the impact won't affect the S&P and the Dow till later on again. I don't know. What do you think?
Another example of that would be gold and silver, that they both blew off and topped in January of 1980. And had huge moves down into March of 1980, then had bounces into the summer. But from that January move to the March lows, gold lost about 45% of its value, and silver lost 75%. And that did not really start to affect the stock market. The stock market did not follow down until November of 1980 into 1982. And then everything kind of crashed together at that time. So yeah, you can have these bubbles which kind of lead the way. And actually, a lot of people forget that in the late 70s, actually equities and precious metals all moved together. But precious metals were actually the strongest part of the market at that point, in commodities as a whole. So I think that's kind of what's happened here. And like you noted, that the S&P almost went back to its March high in August of 2000. And same thing went with housing. Like many subprime mortgage lenders were collapsing in March of 2007, but the market itself didn't top until October. So just because the speculative part of the market collapses does not mean that the market itself is going to collapse. So I really could see, again, like an 87-29 style blow off into the summer, or maybe a correction here followed by a rally to near the new highs, whatever the case may be in the summer. But yeah, I definitely agree that just because Bitcoin potentially can crash and go to 5,000 or something, doesn't mean that the stock market's going to be taken down with it overnight. If anything, that could actually help the stock market in a short term, because people, the stock bulls will say, "See, we told you so." Because a lot of the stock bulls don't believe in cryptos either. We told you so. Because these stocks are the place to be. These cryptos were just a bubble, right? Yeah. So. And if you remember in 2000, that sort of happened. That summer, people were talking about, see, you want to be in the old economy stocks because the tech stocks are too volatile. They've all fallen, 40, 50, 60, 70%. And like GE or whatever the case the stock may be, hadn't really fallen off their highs a great deal yet. So I think we could definitely see that kind of thing play out as well, where maybe the cryptocurrencies are a sign of what's to come, but there could definitely be a delayed effect, and the stock market won't fall to the second half of this year or next year, etc.
Yeah, it's definitely going to be an interesting year no matter what happens. That's for sure. Last year the stock market went up, but they never pulled back. We actually, up until, we'll see what happens, we haven't even gotten to that point yet, but the market hasn't yet pulled 5% off of a high in over a year. It's like a record amount of time for the S&P 500. But even regardless, gold didn't do much last year. The only thing that went up crazy, fast was the Bitcoins. So maybe other things are going to start to move. What is kind of like on your radar screen right now?
I've just started in the last few days to maybe put the hedge positions on. There's a bunch of stocks I've been watching that haven't really moved with the market. One is actually near its support range, and the other one is actually below where it was in the fall. So what I'm looking about with these companies is they've shown relative weakness during this run, and actually even the sell-off of the last few days hasn't really affected them that much. They haven't gone down that much. So I'm looking to say buy put options them or short them. There's actually one blockchain type company. It's actually a crypto miner. I'm looking to short as a hedge as well. I have a long position in one of these little things too. So but it's a very, very, very small position. So anyhow, so what I'm looking at doing is putting on some of these hedge positions. I actually did personally buy some more bear funds and that sort of thing as well. Actually, the trade I'm really interested in, and because I see very limited upside in it and has potential for big downside, is shorting the high yield junk market. If you go look at the early 2000s or 2007, 2008, junk bonds always fall apart during a bear market and a recession. And now with the junk bond spreads being near all-time lows, with the high yield only yielding about 5%, compared to a government bond about 2.7, I think that is a market that's very, very expensive, and it's very cheap to short. The premiums are almost non-existent in the option market, and that's something I'm really looking at as well. And you and I have both also done a bunch of private placements. And, if the market really doesn't do that much over the first half of the year, these things will come public. I'll make some money off those as well, some IPOs. But yeah, really right now, I'm going to be concentrating more on some of the hedges over the next few weeks.
Well, great. Well, we'll watch things develop, and thanks for taking the time to talk with me and everyone else. And we'll talk again soon.
Yeah, thanks for having me.